Welcome, Crypto Fam, to Crypto News Global. I'm your host, Nick Toka. On today's show, pro-crypto lawyer John Deaton volunteers to lead Operation Chokepoint probe. Also on today's show, Trump wants all future Bitcoin mined in the U.S., if it's even possible. Also, JP Morgan, debasement trade is here to say Bitcoin and gold gain structural importance. Also on today's show, analysts post thrilling Bitcoin price predictions for 2025. Also, the feature story of the day, 16 years of Bitcoin. Here's how it's pacing against other tech giants. As always, we're going to go through our market watch and Bitcoin technical analysis. All this and so much more on today's show. Welcome again. Today is January 4th, 2025. Welcome all the viewers out there on the live stream. We're going to have a fun show today. Let's get things started off with our technical analysis. And let me show you my screen and into Coin 360. Today we've got Bitcoin up about 0.5% at 98,331. We've got Ethereum up on 1%, XRP down 1%, Solana's up a bit, BNB down. Everything's pretty much going sideways. We got Dogecoin up 3.5%. Let's go into our market cap. So today's market cap, we've got Bitcoin up a bit, market cap of 1.945 trillion, Ethereum at 439 million, XRP 138 million, and interesting to see that XRP is now flipped Tether USDT as the third largest market cap. Solana number 4, and we've got Doge and so on down the row. Let's get into our Bitcoin dominance. Today, Bitcoin's dominance is 56.9% of the total market. Ethereum down a bit at 12.86, and others 11 point some change. XRP at 4, Solana 3%. Let's get into our crypto bubbles. And today we've got another AI coin. AI Oz is our big gainer of today, 24%. Pengu, whole bunch of meme coins up today. Sui, Hype, XDC. Let's flip into our weekly view. And we've got SPX is our top gainer of the week, 51. The smelly fart coin, another meme AI coin, 61.7%. And let's zoom out to the monthly. And again, we've got meme coin mania here with smelly fart coin up. Doesn't smell that much right now. It's up 483%. Today's crypto fear and greed index. Today we're at a 73 in greed. Yesterday at a 74, last week at a 72. And this is important because if we go into high up on the greed, we normally will see a pullback from that. And if we're very low in fear, we will see a pump traditionally. Let's see what we have until the next halving. There are 1,194,000 Bitcoin left to mine. Approximately 1,076 days until the next halving. In terms of market cap, this is the chart of all assets with the largest market caps in the world. We've got gold still at 25 trillion, Apple on top in terms of organizations, and we've got Bitcoin coming up close to Google's Alphabet and Amazon, which are pretty close here, and ahead of the largest oil company in the world, Saudi Aramco, and way ahead of Meta. And as of today, you can get 1,007 Satoshis for $1. Okay, now let's get into our stories of the day. This should be fun. So one thing I want to look at, our daily watch, which I slipped by, U.S. national debt, currently at 36,310,000,000,000. So this is up $1 billion since yesterday. It seems to be trending up about $1 billion a day. So 36,310,000,000,000. It was at 308 and change yesterday. So every day it's going up. Here's the history behind it. In 1960, debt to GDP ratio was 53%. In the 80s, 34%. 2000, 60%. And as of now, 122%. And each U.S. citizen taxpayer currently owes $323,000 as part of the U.S. debt. And let's get into these stories of the day. Pro-crypto lawyer John Deaton volunteers to lead Operation Checkpoint probe. So this lawyer here is volunteering to proceed on behalf of Bitcoin. So let's get into it. Pro-crypto lawyer John Deaton is taking a frontline role with the quest to probe the Operation Checkpoint 2.0 of the digital currency ecosystem. In a recent post on X, the XRP holder's lawyer said he's volunteering to lead the federal investigation into Checkpoint 2.0. Notably, the pro-crypto attorney comes off as one of the first industry personalities to call for a probe into these broad crypto crackdowns in the U.S. So, just a little background here. Under the SEC with Gary Gensler, the Biden administration, the SEC cracked down and had lawsuits against a lot of these cryptos, calling them securities, unregistered securities, and effectively they would pull all these lawsuits. They basically lost, SEC lost every lawsuit they went into, or it was settled. So now it looks like John Deaton wants to do an investigation into that more deeply. So on the X platform, he outlined his qualifications as a former prosecutor and special assistant to the United States Attorney. He noted this is a basis to take on the task. John Deaton said he would accept the task without salary. He outlined his motivation as a need for Americans to know the truth on government agencies' overreach. As he noted that the impact of Operation Checkpoint 2.0 goes beyond Custodia Bank or other affected crypto firms. He claimed it is a dangerous precedent that can only erode trust in America as free economic market. John Deaton said unelected bureaucrats cannot just pick winners and losers in an industry they just don't like. With the revelations thus far, FDIC documents obtained by Coinbase shows coordinated attempt to cut off the crypto from the banking resources. Meanwhile, to solidify his call-out, he tagged President-elect Donald Trump and leaders that might institute the probe. The plans to probe the Operation Checkpoint 2.0 did not come as part of President Donald Trump's campaign promises. However, industry proponents believe this lingering overreach needs to be addressed before promised reforms will come. The industry is now watching to see how the incoming administration will handle the demands of crypto leaders. Appointed crypto czar David Sachs has promised to look into the checkpoint agenda with backing from lawmakers like Representative French Hill. Only time will tell whether or not incoming administration will consider the volunteer from John Deaton. I think it's great that this lawyer is going to volunteer his time. It's a great cause, and would like to get to the bottom of Gensler and the SEC's overreach in this situation toward crypto, that they really held back the entire industry during the Biden-Harris administration. Let's get into our next story. Trump wants all future Bitcoin mined in the USA. Is that even possible? Well, I can say that it's probably not possible. Additionally, I've gone through all these articles beforehand, and this also says that it's not technically possible, which I believe, but I was surprised with a couple things in this article, like U.S. Is currently mining 40% of all the Bitcoin in the world. I was surprised at that. I thought it was a lot less. But you can't necessarily mine all the Bitcoin, because there's people around the world, there's companies around the world. They would all need to shut down and bring their operations into the States. And this includes even, small at-home miners. Let's get into the story. Donald Trump will be inaugurated this month, but how likely is the president-elect pledge that all Bitcoin will be mined in the States? Bitcoin mining is a big business in the U.S. But how big is it? And will Donald Trump's return to the White House make a difference? The president-elect said last year, along with plenty of other pro-crypto pledges, that he wanted all remaining Bitcoin to be mined in American soil. Spoiler alert, this will be very difficult, if not impossible. This is what I was saying a moment ago. The data compiled by the Miner Mag shows that U.S. miners currently account for around 40% of the mining hash rate, more than any other country. This was what I was surprised at. But experts told Decrypt that it's highly unlikely the pro-crypto commander-in-chief will be able to shift the remaining 60% of the Bitcoin mining hash rate to the States. Agreed. It's impossible, in my opinion, head of digital assets research at Van Eck, Matthew Siegel, told Decrypt. He added that mining operations all around the world would have to shut down and operations in the U.S. would have to take their place. And C.J. Burnett, Chief Revenue Officer at Compass Mining, which provides Bitcoin mining, hosting, and other services, told Decrypt that while his company was excited about Trump's eagerness for the industry, it would be impractical to move all mining operations to the States. The U.S. lacks the electrical infrastructure, physical computing hardware, mining machines, and sufficiently low energy costs to become the only place for mining all remaining Bitcoin. And I agree with that. The U.S., there's other countries around the world that have much cheaper electricity costs where it's going to be cheaper to mine Bitcoin. Russia announced a few months back that they're going to be using Ethiopia as their mining hub due to their cheap electricity. Ultimately, Bitcoin mining remains a globally distributed network driven by market economies, energy availability, and regulatory landscapes worldwide, Burnett added. In order for the Bitcoin network to function as a payment network, miners work to add blocks full of data, information about transactions, to a long-running public ledger known as the blockchain. As Bitcoin has grown since its launch in 2019, it's become a very big and very secure computer network. It is a lot more difficult to add new blocks, and mining operations are now forced to use a lot of energy to do so. I agree with that. Now, we have gone to over 50% of the mining globally is now being mined. I believe it's at 55% using renewable energy. Part of Bitcoin's nature is that it is decentralized, so anyone can get involved in helping run the network. As a result, miners are spread out around the world, though larger operations tend to set up shop in locations that provide favorable, cost-efficient conditions to support profitable mining. Other mining hotspots include Kazakhstan, Russia, and Canada. U.S. became the leader in Bitcoin mining after China launched a 2021 crackdown in the industry, pushing miners elsewhere. Yeah, I do remember that. They outlawed mining in China, and now they've gone back on that, reneged, and said, yes, you can mine here because they don't want to lose the race. The Miner Mag data shows that the top 20 public U.S. mining companies minted 3,794 Bitcoins worth approximately $366 million at the time of writing in November alone, so that's 1 month. And industry bigwigs are feeling confident about a Trump presidency. Let's move on to our next story of the day. And J.P. Morgan says debasement trade is here to stay as Bitcoin and gold gain structural importance. Bitcoin and gold are structurally becoming the key components of investor portfolios, according to J.P. Morgan analysts. As a result, the debasement trade, driven by concerns over inflation and fiat currency devaluation, is here to stay, they said. This goes completely 180 compared to J.P. Morgan's historical view on Bitcoin, but they're turning the page, I see. J.P. Morgan analysts said the debasement trade is far from a passing trend, with both gold and Bitcoin gaining structural importance in investor portfolios. The gold price appreciation over the past year has gone well beyond the moves implied by dollar and real bond yield shifts and likely reflects the reemergence of this debasement trade. J.P. Morgan analysts led by Nicholas Panigirtzoglou wrote in a report on Friday. Meanwhile, the record capital inflow into crypto markets in 2024 suggests that Bitcoin is also becoming a more important component of investors' portfolios, they added. The debasement trade refers to a strategy where investors turn to assets like gold and Bitcoin to hedge against the devaluation of fiat currencies, often driven by factors such as inflation, rising government debt, and geopolitical instability. They didn't mention in here the constant printing of fiat currency, which I would consider the number one debasement model of fiat currency. So people are putting the money in gold and in Bitcoin to hedge against the devaluation of these things. The structural rise of gold in investor portfolios is evident when examining the amount of gold held for the investment purposes by central banks and private investors. According to the analysts, this includes physical gold, gold ETFs, and other investment vehicles, which now account for a significant percentage of the total assets held by non-bank investors globally. Bitcoin is becoming an increasingly important part of investor portfolios. J.P. Morgan analysts called 2024 a pivotal year for the crypto market, estimating that a record $78 billion flowed into the space. And let's just go down to the bottom. Overall, with both gold and Bitcoin gaining structural importance, the debasement trade is here to stay, according to the analysts. Last October, the analysts expressed bullishness on the crypto heading into 2025, citing factors such as debasement trade, growing institutional adoption, among others. I agree heavily with J.P. Morgan Chase in this scenario. A lot of people are putting their fiat money in a more stable place, like gold, like Bitcoin, like silver. With inflation concerns, with the constant printing of dollars, it's a hedge against inflation. And while fiat money continues to lose its value, Bitcoin, gold, probably silver too, will continue to gain in value slowly but surely. And People are going away from the fiat currency. People aren't idiots. They see the constant printing of money. They're getting smarter with their money. They're getting smarter with geopolitical views and outlooks, and more intelligent about how money works. And they're seeing that the constant printing of money is just devaluing what they own. A dollar 5 years ago can't buy you what a dollar can buy you now, whereas a Bitcoin 5 years ago can buy you a lot more than it could 5 years ago now. So it's kind of a Bitcoin's ascending and gold is ascending and fiat money is descending, and that goes with really any fiat currency around the world. The whole basis of a fiat currency, there's an infinite supply. If they need more, they'll just print more. Gold is fairly scarce, although they do find more gold every year. Bitcoin, there's going to be a finite supply, maximum of 21 million coins ever created. So this alone makes it a big hedge against any kind of inflation. And I do agree that having your money in fiat is really not a good idea right now, and it might not have been for a long time. Going forward, Bitcoin is a much better hedge against inflation, and you should see your equal Bitcoin have more buying power in the future, as well as your gold, as well as your silver. And if we go back to the U.S. national debt and we look at the gold areas here and the silver areas, you will see that dollar to gold ratio now is showing a price of 9,200. Dollar to gold ratio in 5 years is showing a fair increase to 12,000. Dollar to silver ratio now is it's showing 1,100, and in 5 years 1,500. So we really, considering what we see up here with the U.S. national debt continuing to go up, next year, to bring all manufacturing back into the U.S. the way Donald Trump wants to do, and I agree with his agenda, sounds very nationalistic and traditional, but they're going to have to print a lot of money in order to get all the manufacturing back into the States. So again, this is going to increase the national debt even more, and the more they print the money, the more Bitcoin's going to end up being worth, because there is a finite supply of Bitcoin. And as we're going to see over the next couple of years, and as we've seen really over the past 10 years, there's pretty much an unlimited supply of dollars. Let's go into our next story of the day. Analysts post thrilling Bitcoin price prediction for 2025. Where's the top? The little orange cryptocurrency was one of several digital assets in the segment walloped 2024 gains for investing in U.S. stocks like those in the S&P 500 and NASDAQ. Others like Ripple, XRP, tokens for international settlements between the large institutions performed even better and were up 247%. And it notched 271% for the year on Wednesday. But here's some leading analysts, what they expect in the Bitcoin price to carry through some point over the 2025 calendar year. For a basis of reference, Bitcoin traded on average crypto exchange at 95,000 Wednesday, and we're already up over 98,000. So first we'll go into the bearish. Peter Brandt, boo. Price prediction 80 to 160,000. All right. Coin shares prediction 80,000. again, bearish. And the bullish targets here, let's focus on those. 160 to 250,000, and that is Standard Chartered, and they're predicting 200,000. British multinational bank Standard Chartered research head Jeff Kendrick says his office is targeting 200,000 and BTC in 2025. He added that the entry of the U.S. government into the Bitcoin race is likely to fuel that rally. I am in concurrence. Even a small allocation of US dollar into U.S. retirement funds would significantly boost BTC's price, Kendrick noted. We would turn even more bullish if I saw more rapid uptake in U.S. retirement funds, global sovereign funds, or a potential U.S. strategic reserve. Nexo, Swiss-based crypto fund manager Elitsa Taskova told CNBC, "We see Bitcoin more than doubling to 250,000 within a year." She points out to ongoing trends in adoption by institutional finance and social indicators for a bullish outlook in 2025. I've seen other predictions upwards of 500,000 and even into the million. If we go into my charting, we'll see that I go by the historical chart, and as we see here, I'm going by the halving. So each vertical line here is each halving, which happens, Bitcoin halving, which happens every 4 years. So we see here December of 2012, July of 2016, May of 2020, and the latest, which was April of last year, 2024. And I use the Fibonacci model, which if you want to test this out yourself, I would recommend doing so and not follow anybody else's predictions, but rather do your own research, do your own charting. This is 100% free TradingView. You can go to the website, tradingview.com, or you can download the app, which is also free. You just need to register, but there's no fee for it. And with this modeling, you've got full control and you have a lot of options. What I used is I drew vertical lines, which was here, to indicate the Bitcoin halving dates, which I researched the exact date and got as close as I could. And then I used the Fibonacci retracement and added the Fibonacci to my charts. So as we see here, for each halving, I've added the Fibonacci tracing. So when we go to the first halving, so 2012 December until the cycle peak, which was November of 2013, we have a price difference of, it went from $150 to $28.75, and the difference in that, I divided one into the other and it got 19x. So it was up 19x in that halving cycle. Then the next cycle is July 2016, and the cycle peak was December of 2017, and in that case it went from 2780 to just under 15,000, as we see on the right here, and that is a difference of 8x. The next halving, from May of 2020 until October 2021, we have a difference of 7x. So as we see, there's a slight reduction. Let me share my chart. We go back to the Fibonacci here, and just to re-show you, I realized I wasn't sharing my screen. I used the vertical line, and then I used the Fibonacci retracement to add into each halving. So here was the first halving I spoke about. It went up 19x. The next halving in 2016, from the halving date until the cycle peak went up from 2,700 to 14,000. Then the next cycle went in May 2020 to October 2021. We went from about 7,000 to mid 60,000. And then I have, again, my own research, and I have two scenarios here, and that as we see each halving, we're getting less and less of a multiplier. So first one, 19x, then it was about half of that. Then it was 7x. So now I've created two scenarios. One where the price goes up from the April 2024 halving date, and then I'm suggesting the cycle peak. In last time we had this double peak here, and we had in April was the first peak, and then we had quite a correction here, and then back up in October to the actual highest peak of last cycle. And I have two possibilities here. One is a 3.5x, and that would bring us to 220,000. And then I have a 6x, kind of following this pattern of 8, 7, 6. And so my personal prediction, and again, this is not financial advice, I recommend you do your own research and do your own tracing, and you can take this with a grain of salt. And that if we have a 6x from the halving date, then we'd be looking at a cycle peak of about 375,000. Let's get back into our stories. And our feature story of today is 16 years of Bitcoin. Here's how it's pacing against other tech giants. So a few days ago we had the birthday of the Genesis block, and first block ever created in Bitcoin. And this seems to be commemorating that. Bitcoin turned 16 years old on Friday last month. It marked a record high of 108,000 for one Bitcoin. Here's how three Silicon Valley tech giants were doing on the 16th anniversary of their founding. So they're taking three companies, I believe was Meta, Amazon, and Google. And let's go down here. So how do they compare? So firstly, Bitcoin and NASDAQ leaders compared. Bitcoin trading on the Bitcoin Talk Forum via handshake agreements and PayPal for settlement of an average of 0.00099. A bag full of Bitcoin worth $1 then is worth some 9.8 billion for the same amount of Bitcoin at current prices. So that would be a 989 trillion% increase in value in 16 years. It's a rate of growth so staggering, traditional financial markets have only recently begun to comprehend that it's even real. So let's go into some other NASDAQ giants here. Google debuted in 2004 at $85 a share IPO. 11 years later, they were trading at $193, and then they split their stock in 2022. The company issued 20 shares for every investor, each stock owned at the time. So adjusted, the return on stock in 11 years from its IPO date is actually pretty good, 4,500%. Certainly doesn't come close to the 990 trillion%. Amazon debuted at $18 a share at 1997. It traded for 224 some 28 years later, but after 4 stock splits, IPO buyers with any remaining shares have 240 for each one they bought in 1997. So imagine how many splits they've had. So adjusted return on investment for Amazon stock from their IPO is actually pretty huge, almost 300,000%. Bitcoin can give it 11 extra years of growth and still absolutely diminish these gains by comparison, for sure. And Facebook stock started at $38 a share in 2012. On January 3rd, a couple days ago, it traded for $6.04. Company is now called Meta and has never split its stock. So the return on investment after 12 years on it for Facebook is 1,589%, 1,589%. Not too shabby, but nowhere near the 990 trillion% that Bitcoin's marked down. I'm hoping that Bitcoin continues this trend on the double, triple digit gains. I think she's been doing well, and with the things we have going on with the U.S. presidency wanting to create a Bitcoin strategic reserve, we might actually see quite a rise this year. I want to talk a little more about the book of the week, and the book of the week is the Bitcoin Standard by Saifedean Ammous. We spoke about this a little bit the other day, and I really recommend you guys give this a read. And in fact, I have links where you don't even have to read it, you just have to listen to it. It's on YouTube. I've got a link to the author's site, and I also have a link for Amazon. You'll see that in the notes of the live stream and in the chat of the video in YouTube. So this book is excellent. I would highly recommend it. It really goes into the history of money. About the first 5 chapters is all about the history of money. Then it starts talking about Bitcoin and how Bitcoin will fix all the historical problems that we've seen with money. And effectively, every type of money has had its issues. And the issue that always seems to be reoccurring is that there becomes too much of it. It's too liquid. A good example they gave, they give multiple good examples in the book, and effectively something is worth a fair amount of money. You know, they have examples of rocks being used as money, tulip bulbs being used as money, precious beads being used as money. But once a huge influx of these goods comes into the market, then it makes these items useless as money, worthless, I should say. So that won't happen with Bitcoin because there's a finite supply. There's never going to be more than 21 million. And in fact, due to many losses of Bitcoin, there's really about 15, 16 million only ever that are going to be minted. So in the Bitcoin Standard, it then goes a little further to talk about how Bitcoin is going to be used in modern society, and that in the future it likely will be used as a reserve for the financial system. So when a transaction takes place, it may or may not take place in Bitcoin, but at the end of the day, what will end up happening is the banks will do their daily close in Bitcoin, and any international transactions will get finalized at the end of each day. It's not feasible to do every transaction in Bitcoin because it takes 10 minutes to complete the transaction. So there might be some other layer 2 coins, for example, XRP. You make a transaction with that, it's pretty much immediate. And then at the end of the day, the banks will settle in Bitcoin, country to country, one final transaction done by the bank, sent to the other bank in the other country to close it out. He then goes on to talk about in the book the potential downfalls of Bitcoin and the security of it and the strength of it. He talks about, you'll get a good understanding of mining and nodes, Bitcoin nodes, when reading the book as well. He's very thorough, and I would really highly recommend you guys give it a listen. It's a little lengthy, but listen to it in the car, little by little, half an hour drive each way from work, an hour drive each way from work. Before you know it, in a week, 2 weeks, the book's done, and you've given yourself more ammunition and more information and financial literacy to help you through any avenues that might come up. The more information you know, the more financial literacy you gain yourself, the less you're going to rely on financial institutions, banks, mutual funds. These guys are taking large management expense ratios, 2, 3, 4%, and it's almost a crime. Whereas if you can learn to take care of your own money, save your own money, invest your own money, build wealth with your own money, make your money work for you, you'll go a long way in keeping what you've earned rather than giving it away to the banks. And remember, everyone, money is abundant and everywhere. Time is what's scarce. Spend less than what you earned. If you make more suddenly, save more. Don't spend more, and start saving today. The younger you start saving, the better you are. You can definitely retire at 40 if you start in your 20s. Not retire at 65 or 70 when you're not able to do the things you love anymore. If you have a great idea, start today, go for it, even if you're not ready. And again, folks, if you found this stream useful, please like, subscribe, and share, and we'll see you on the next stream.